What if you bought a home? And what if you lived there for 30 years? Today, we're hopping in a time machine. We're going back to 1995 and look at what it would mean to a homeowner that bought a home in 1995 all the way to today, and how that home purchase could have totally affected their family's financial picture.
I keep it real, I keep it real, I keep it real, just keep it real.
Hey, what's up guys? It's Sam Hartman, keeping it real estate here in Fort Wayne, Indiana. And I'm excited about today's topic because it's gonna paint the financial benefits of home ownership, especially over time. There's this saying that I love, and it says that time in the market always beats timing the market. And so what that really means is that the longer you own your investment, the longer you hold, whether it's a property or stocks or stock market, whatever you're holding, your time holding it is the true value versus the time at which you bought it. You know, everyone wishes they bought at the bottom of the market or bought 10 years ago, but really the longevity of that investment is the true value. And today's conversation, I think, is going to paint a really great picture of that. Building wealth, building equity is not the only reason you buy a home. There are a lot of non-financial benefits to owning a home. There's the peace of mind, the security, the stability, the community of your neighborhood. There's health benefits. There's benefits to your kids' development. There's so many reasons to own a home other than just purely the financials, but you cannot underscore the financial and wealth building benefits of home ownership. That's why homeowners actually have 40 times the wealth, regardless of income bracket, as opposed to renters. So I hope today's conversation helps paint that picture well. And if you have questions about how to take next steps into home ownership, I want to be that guide. I want to help you find your way to taking advantage of these many wealth building opportunities that home ownership can provide. So hop on in my time machine. Let's go back to 1995, where the average sale price back then was about $130,000. Now, that sounds great. We'd all wish we would have bought a home 30 years ago. The average interest rate back then was just over 8.5%. But over the 30-year period, we actually saw home prices rise in the United States by over 300%. So that's on average 100% per decade. Every decade, that home doubled its value. Now, that's the United States national average. If we just look at Indiana, our average is a bit lower. Midwestern states tend to be a little more conservative in terms of their housing markets. The coastals, East Coast, West Coast, California, New York, Florida, those tend to have more moody swings. Their highs are high, their lows are low. But one of the things I love about Indiana and Fort Wayne, Indiana specifically, is that our housing market's very conservative. Our swings are not as high. Our highs are not as high as them. There were housing markets during the COVID boom that were appreciating by 60%. Fort Wayne capped out at 18% highest, but we're still growing stronger and outpacing the national average even today after that boom has settled down. But then look at the housing crash. Some markets crashed by more than 50%. Fort Wayne, Indiana, during the great financial crisis, during the 2008 housing crash, only lost 5% in home values. So that's one of the things I love about our housing market, is that it is conservative in its response to these kind of economic levers, pulls, and pushes that kind of come into picture. And so if we look at Indiana over that same 1995 to today period, that 30-year period of price appreciation, we're closer to 200% price appreciation over that time. Darn, right? Really underselling it. No, it's still phenomenal price appreciation, and it shows that meaning of time in the market beats timing the market, because over that 30-year period, we saw one of the worst housing recessions, one of the worst housing crashes the nation's ever seen. And yet still, even making its way through that timeline, homeowners saw an amazing return on their investment over a 30-year period. Now, some people will look at this data, will look at these statistics, and they'll say, that's still foolish to buy a house because guess what? The S&P 500 actually had returns over 900% over that same 30-year period. Well, let's look at a few other key things here. Number one, homeowners buy with leverage. They're not spending that full amount in cash. They're usually leveraging a mortgage or a bank to help them finance that property. So the typical homeowner is only putting down between 5 and 10% of the purchase price. So let's say back in 1995, that homeowner buying a $130,000 home put 10% down. That's $13,000. And now today, that home has appreciated over 300%. That has 30x'd their investment, whereas the S&P 500 only 10x'd it. So that is something to consider there. Buying with leverage really means you're putting less money down to begin the snowball of that asset growing. The other caveat to this argument is, if someone doesn't own a home, they still have expenses going towards rent and other living costs. If you're not putting your money into your house, you're putting it into rent, or you're putting it into some other way to live. So that money is not necessarily being able or capable or available to just roll right into the stock market and leverage those long-term gains as well. So that's something to consider. And number three is the utility of your home. Yes, it can be a phenomenal wealth building tool, but it's also an amazing personal asset that you get to use, touch, and feel every day. You don't get to go out and put fresh, clean-cut mower lines in the lawn of your stocks. You don't get to plant an apple tree and hang a swing from that apple tree in your backyard that you push your kids on the weekend. So the non-financial benefits of homeownership, obviously you're not taking your stocks on a walk like a dog. They're just not there in the S&P 500, and homeownership, it is there. So phenomenal wealth building over time, also phenomenal utility, peace of mind, happiness that can be generated from homeownership over time as well. Another huge benefit of homeownership over time is that homeownership is a phenomenal hedge against inflation. Now, inflation is a hot button word currently over the last couple of years as we've been experiencing rampant inflation due to the kind of the COVID-19 pandemic and the fallout of the response after that. But inflation is always there. It's just not always as much of a hot button topic. So for the homeowner that locked in a $130,000 home 30 years ago at an 8.5% interest rate, they had monthly housing costs of about $900 a month. And so when you buy a home with a 30-year fixed mortgage, the largest chunk of your housing expenses stays fixed. It doesn't change. Now, there are going to be some changes. Your taxes may go up over time. Your homeowner's insurance may go up over time. But that large chunk, the principal and interest payment of your mortgage, stays the same. But guess what? That stays the same, but incomes tend to rise. Over that same 30-year period from 1995 to today, U.S. total personal income rose by 312%. So as incomes are rising over time and your mortgage payment is staying the same, that's eating up a smaller percentage of your income. And so that's a phenomenal hedge against inflation because that payment is not inflating, but your income is rising to make up for those other costs. So the longer you own your home, the more benefit you can receive from that hedge against inflationary pressures. But let's say you rented during that same timeline. Your household income may have rose by 312%, but guess what? Rents are inflating during that time as well by 176%. So that's eating into your wages, that's eating into your income. It's not inflating at the same rate as your wages are, which is good news, but it's still chunking away at some of that disposable income that you could be putting in other places, investing in the stock market, taking trips and experiences, or investing in other ways that you'd like. And then the third huge opportunity is the potential opportunity to refinance those costs as well. So back 30 years ago, in 1995, that interest rate was about 8.5%. But in the early 2000s, you could have refinanced that down about 2 percentage points to 6.5%. Around 2005, again, you could have refinanced down closer to 5%. And then, of course, with the COVID pandemic boom of the housing market, that was driven by super low interest rates around 3%. So the refinance opportunities only present themselves to people that already own homes. I know a lot of home buyers that are out there in the world today, and they're just saying, I need interest rates to get lower. And maybe they will. Maybe interest rates will come lower, and that'll help affordability for some home buyers out there. But guess what? If you bought a home today, a home that you like and love and can afford the monthly payments out into the future, you can leverage those lower interest rates whenever they do come. But home buyers that are sitting on the sidelines, they don't have that same opportunity. They're trying to time the interest rate market. And like I said before, it's not timing the market, it's your time in the market. The people that bought homes in 2020, 2021, when interest rates were in the 2%, low 3% range, they were competing heavily to purchase those homes. But people that already own their homes, people that owned their homes previously, they called up their bank, they called up their lender and said, hey, I'd like to refinance my home. I'd like a piece of that 2.75% mortgage rate, please. And they were able to get it. So that is the big benefit of already owning your home and leveraging lower rates versus trying to time interest rates and capture a lower interest rate. So let's give an example. What if you bought a home today? Interest rates are about 6.8% today, and they're volatile and fluctuating, so don't hold me to that number. But let's say you bought a home today, and guess what? What if interest rates go up? What if they go up over the next year? Because the volatility of the economy, the volatility of tariffs, and the unknowns that we have in our market right now. What if they go up? Wouldn't you be happy to have that 6.8% interest rate? Well, now what if they go down over the next year? What if they go down over the next 3 years? Well, guess what? You have a home that you can afford at today's interest rate, but you can make that home more affordable by refinancing to an even lower rate. So again, time in the market versus timing the market. That is kind of, I think, the takeaway I want you to take from this video today, and the value of owning a home over time. Now, I know it's not that simple for everybody. Saving money for a down payment is challenging, but don't fall victim to the myth that you need 20% down to buy a home. I'm currently working with buyers that are leveraging down payment assistance programs to start making home ownership achievable for them. So there could be a lot of options available to you. You just need to reach out so we can take the next steps to figure out what might be possible. So with that, guys, what if you bought a home today? And what if you owned that home for 30 years? Now, I can't say the results are going to be the same as from 1995 to today, but I can tell you that history paints a pretty consistent picture that homeownership over time is going to be an amazing wealth building engine for you and your family. So if you plan to live somewhere for a 5-year period, personally, I think it's worthwhile exploring the possibility of owning a home versus renting a home. All right, guys, I hope this story provided some context and clarity to you so that you can be confident real estate consumers out there. If you have questions, if you have feedback, let me know in the comments, because I want to respond. I want to give you guys the information that you need and help you be prepared to hit the ground running on your pursuit of home ownership. Keep it real estate out there, guys.